Are tech stocks ready to rally after the recent beating? That's coming up in today's 3 minutes on Markets and Money. Tech stocks under the gun again, being drugged down pretty sharply yesterday morning. However, about midday saw a real turn in the index, with the index actually finishing up positive for the day. Of course, that was after the Nasdaq broke through 3 standard deviation levels from the 50-day moving average. Now, that's a very big extension from the moving average for the Nasdaq, and something that doesn't occur very often. But this is a very bullish setup here short term for the Nasdaq. First of all, the Bollinger Bands have compressed a good bit. Now, that's actually kind of a bullish sign here. And with the markets now 3 standard deviations oversold, a rally here should start to spread out those Bollinger Bands, giving us a bit more room to run on the upside. Now, in the short term, there's still going to be pressure on the Nasdaq near term because of what's happening with interest rates, concerns over inflation, Fed liquidity, of course. So that would suggest that in the near term, we may see a bit more choppiness and sloppiness in the index. But we could well start to see some of those technology stocks that have really been beaten down over the last few months starting to get some traction here. So it's worth kind of picking through the rubble to look for some good opportunities that have really had a lot of their valuations reduced because of that recent selling. Now, on a more technical note for the markets right now, as I said, the markets are oversold here, 3 standard deviations below the 50-day moving average. Bad news is that the 20-day has crossed below the 50-day moving average. From a technical basis, in the short term, there is going to be some challenges for the Nasdaq. First of all, the Nasdaq, of course, is 3 standard deviations oversold below the 50-day moving average. That does provide a good level of support. That support really kind of running back here through these recent bottoms. So again, the market has some support here to work off of, but the 20-day has now crossed below the 50-day moving average. Now, that's going to apply some overhead resistance to the markets near term. So when we get this rally, this is going to be kind of that first level of challenge, is going to be this cluster of moving averages just overhead. Furthermore, we are still on a money flow sell signal here. That does suggest that there's still selling pressure on the index. So again, rallies may be kind of short-lived here in the short term. So again, use any rally here to start to sell positions that have really been underperforming, reduce that risk bias in your portfolio, but start to actually look through the Nasdaq here for some potential longer-term opportunities, because a lot of these stocks have had big declines over the course of the last several months. There are some good companies out there that have been kind of baby with the bathwater. They've really been beaten down a lot here. Take a look at those fundamentals. Look to buy some value in those stocks that have been beaten up. But we're still a bit early here to have the Nasdaq back into a buy mode. That's going to be a little bit more work here before it's all said and done. But we need to get this money flow indicator back onto a buy signal. That's going to suggest some more choppiness here before we get a breakout to the upside. That would probably be sometime in the next several weeks. So again, got a little bit of work to do here first. There is risk, of course, to the downside if the Fed does maintain their much more aggressive stance. So again, we're not completely out of the woods, but we're oversold enough short term for a bounce. So again, use this bounce as an opportunity to kind of clean up some of the high risk, high beta names, start to rebalance some of the portfolio structure accordingly to help lower your overall risk tolerance. And again, allow yourself to kind of navigate through this until we get back into a bullish trend and we get back into a position where we have more clarity about what markets will be doing next. That's 3 minutes on Markets and Money. See you back here tomorrow.